So we need to talk about the US banking crisis because good news, the banking crisis may have just been solved, but experts still believe there's about 300 banks in the United States that could completely fail and collapse within the next 6 to 12 months. So I'm going to break down what is going on and why we are now hearing potentially good news that this banking crisis may have just been solved because of a report that came out earlier today. So I'll break that down in just a moment, but all I ask is one thing, it takes 2 seconds, go ahead, hit that like button if you enjoy these daily updates, and now let's begin. So first things first, why are so many people concerned about a banking crisis? Well, it's because of things like this. Republic First seizure signals more bank failures to come, according to experts. It says fears of contagion reignited by first U.S. bank failure of 2024. Now, I want to be very clear on something. We know that on average, there's a handful of banks that will fail every single year. I think it's between like 4 and 5 banks fail every single year. That's perfectly fine. But what we can't see are potentially 300 banks. Because according to a new report, they have did a survey and analyzed 4,000 banks. 282 of them were going to fail. Okay, they are stressed. Now, I want to show you something else first, and then we'll get to the big news that came out earlier today. It says $133 billion in deposits exit U.S. banking system in 1 week as former Fed president warns lenders are vulnerable. Okay, this was just from today, all right, May 3rd. But I want to read this to you, okay, because the biggest thing is that people are pulling money out of the bank. Look at this. It says the latest data from FRED, the Federal Reserve Economic Data System, shows total deposits in all commercial banks fell $133 billion in just 7 days. This came from April 10th to April 17th, so about 2 to 3 weeks ago. Again, when you pull $133 billion from the banking system, that will leave those banks vulnerable. That is why there's still pressure on those banks as we speak. But here's the good news. Okay? Today something happened, and here it is. The U.S. job growth totaled 175,000 in April, much less than expected, while unemployment rose to 3.9%. Here's what experts are saying right now. Experts are saying that if we see unemployment tick up a little bit, and we got to be very careful here because what the Federal Reserve cannot have is unemployment over 5%. Okay? And as we get closer to that 5%, that will be troubling. That's when the Federal Reserve will have to change their tune and change course. And they don't want to do that. They can't do that yet. But here's what we are hearing from experts. They say there's $962 billion in commercial real estate that is due for refinance in the second quarter of 2025. So about 1 year away. They say, but the problem has always been the Fed was saying rates are going to stay higher longer. That's up until today. Because now what we are starting to hear is that there's a chance we see a federal a rate cut either in September or most likely in December. That is going to happen if we see unemployment stay at 3.9% or touch that 4 to 4.1, 4.2%. But I want to break this down, okay? And here's the reason why. A couple things that also came along with that jobs report that came out this morning. Hey, we learned that unemployment went up from 3.8% to 3.9%. You can see it right here. Look at this. Okay? This is as of today. This is 3.9%. Okay? Total unemployed people, 6.5 million. Unemployment insurance claims, 1.9. But you look at this. So from March 2024, this was 2 months ago, it was 3.8%. And then today, which we were a month behind, but for April's jobs report, it's 3.9% is what our unemployment is. So it's going up. All right, look at this. We were down at 3.6, 3.4%. Okay, so we're starting to go up. It's not flat, not going down. We're starting to go up. Well, here's why that's important. If we see unemployment go up, okay, what has to happen is businesses need to come out and hire more people. And if businesses hire more people, well, they have to be pretty much enticed to do so. They're not going to hire more people if rates go up. We need rates to come down. Okay? But this is what experts say right now. They say wages also rose by 0.2% month over month. The average work week dropped from 34.4 hours per week to 34.3 hours per week, so it went down by 10% or 0.10%. All three of these things have Wall Street currently predicting that we will see a rate cut in September or December. Here's the reason why that's important, and this could potentially save the banking crisis. If we see rate cuts, this means it becomes a little less expensive to refinance a bank loan, a commercial real estate mortgage. Okay? Keep that in mind. The biggest thing that is haunting banks is interest rates, because they keep going up, and then now they're flat. We've been pausing them for months, but if we see it go up, that's going to put more pressure on the banks. That's going to hurt. So the Federal Reserve does not want to do that. Also, if we see unemployment go up, this means that less people are spending money in the economy. If less people are spending money at your local Dave & Buster's and Target and Walmart and Costco, that's good news for the Fed, because now we are seeing less pressure on pushing the inflation rate up. Okay? So because of that, all these things, if we see rates go down, this now means that banks and these businesses could come back and refinance these commercial real estate mortgages. I don't think they will, and not all of them will, but they could, because then it may be in their benefit to do so. We don't know. But this is why experts are currently saying that this banking crisis may have just been solved because of unemployment going up. Now, I'm going to leave you with that. But just understand, things could change at a moment's notice, because on Wednesday, just 2 days ago, we were concerned that we would not see a rate cut for all of 2024. And then just 2 days later, we see unemployment go up. We see there's more pressure on the economy, and because of those things, wages, the average work week, and obviously unemployment in general, because of those three things, now experts are predicting we see a rate cut possibly in September or December. That's big news. So again, I will leave you with that. That is what we know as of today. But one thing I can tell you is I will be here every step of the way. I'll fill you in on all the latest news and updates, but that is what we know. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.